So today's panel, we're going to divide it into two dimensions. The first layer, we're going to discuss on the commercial reinsurance market, the overall infrastructure for the reinsurance, starting from the political risk insurance and the war risk insurance. And we are delighted to have the announcements on the new projects under actually the war risk insurance. The second layer, we're going to also have the European Investment Bank and EBRD, and we will discuss the capital that have been deployed in Ukraine in various formats, starting from debt financing, equity financing, and the project finance. Lastly, we will have the extended discussion on guarantees and the associated financing that comes from various export credit agencies. So let me introduce the first set of esteemed speakers of our panel. First, Deputy Vice Prime Minister Yulia Sviridenko oversees and leading the development of the Ukrainian economy and especially the insurance schemes for covering the private sector risks and unlocking the private sector development. Then we are privileged to have the presence of the U.S. Special Representative to Ukraine's economic recovery, Penny Pritzker. Madam Pritzker has been a tremendous partner to us, rallying the private sector to action to invest in Ukraine now and helping us to get our partners and prioritize the needs of the economy. Then Mr. Scott Nathan, CEO of U.S. Development Finance Corporation, together with the president of Aon, Eric Anderson, will introduce a transformative and new insurance facilities for Ukrainian businesses. And we will wrap up the first bunch and the first part of the panel with Mr. Alfonso Garcia Mora, IFC Vice President for Europe, on the project finance and the Ukraine facility second pillar projects. So with this, let me say thank you, and please, Vice Prime Minister, the floor is yours.
Dear participants, I welcome everyone to Ukraine Recovery Conference. And first I would say that we have been witnessing during the last 2 years how the idea of war risk insurance have been evaluated, and from Lugano to Berlin. So now actually we would be ready to give you the slide. So we unite all the war risk insurance instruments that exist on the market, just to show you how broad this support is. So you might see it. Oh, good. We are actively enhancing risk insurance offering to encourage investment from both Ukrainian and international investors, particularly to mitigate war risk insurance. So these risks include political violence, currency inconvertibility, expropriation, and risk related to goods in transit or storage, and financial liabilities. So at the international level, you might see that our ministry collaborates with institutions such as MIGA, with DFC, with export credit agencies. We're trying to develop comprehensive risk insurance options. And it's also engaging with foreign governments and export credit agencies of partners country to craft specialized insurance solution for the global investors. Nationally, recent Ukrainian legislation has broadened the National Export Credit Agency mandate to include insurance, direct investment, and investment loans for development export-oriented business. So now we amend legislations, the regulation in place, and we start to provide this insurance for Ukrainian company willing to get the insurance. In April 2024, we expanded the definition within its insurance coverage to include military risks such as military conflicts and terroristic acts, and political risk like unlawful state action and the illegal revocation of licenses. Additional instrument will also be made available through the new created Ukraine guarantee under Ukraine investment framework, where we talk a lot about Ukraine facility plan. So one of the pillar 2, it's 7.8 billion euro, will provide financial risk coverage for a wide range of transactions in both in public and private sectors. So that's why we invite investors to use this mechanism and to take advantage of this robust support system and to become integral to Ukrainians' transformative journey towards a resilient and prosperous future. And during these 2 days, we emphasized several times, the war is not an embargo on investment. And the final figures, FDI last year showed us that 4.2 billion in the Ukrainian's economy. It's more than 2016, 2017, and we must elevate these figures. So thank you, and hope to have a productive discussion. Now I'll pass the floor to Pani Priska.
Thank you. Thank you, Deputy Prime Minister. You've been a terrific partner since the day I began my job. It's really great to work with you. This is a really exciting moment, and I know most people don't say that when you start talking about insurance, but I am very, very excited because, since I became the U.S. Special Representative for Ukraine's economic recovery, I've heard repeatedly from the Ukrainian government and partners in the international community of the challenges to the Ukraine's economy posed by the lack of insurance options for both domestic and foreign investors. And it became evident that this absence, especially the absence of war risk insurance, was hobbling Ukraine's ability to attract new investment and support an economy that would be more attractive to private sector engagement. We all know that that requires insurance. In order for people to invest, you have to have insurance. It's kind of one of the first 2 or 3 things as an investor you think about. And so my team took the call to action, and for the past 8 months, and the people who really answered the call to action were DFC and Aon. And we were just talking about the fact that literally, I think I was day 2 on the job, and I called my friends at Aon and I called my friends at DFC, and I said, I don't know a lot about insurance, but I know we need it, and in order to really help Ukraine's economy. And what Aon and DFC have done is really tackled this problem with a practical, sustainable, and innovative solution. And so it's really exciting to announce the culmination of that work today. What Aon and DFC have built provides a scalable, replicable reinsurance facility targeted to Ukrainians' SMEs. But it can also serve as a foundation for meeting a broader insurance needs during the war and supporting Ukraine's recovery needs during peace. So we're building something here. We've created something here that's an example that can be easily replicated. And that's really the major takeaway is not only do we have new capital coming into the market, but we also have something that can provide an example of how others can do the same thing. And that will contribute to restoring the local insurance industry and helping it grow, but it's also going to contribute to growing the economy in general. And I'm going to let Erica and Scott speak in greater detail about the facility because you do not want to hear me on specifics on insurance. But I want to be clear that we intentionally built this model to scale. We recognize that Ukraine's insurance industry, for it to thrive once again, it'll require many other insurance players to return to and reactivate the country. And I'll be spending time in the coming weeks urging other insurers, multilateral development institutions, and donors to explore how they might replicate and contribute to this model. I'm really confident that this facility will bring much needed capital to Ukraine and support its economic growth now, while the war continues to rage, as well as afterwards, when peace is restored and the reconstruction begins in earnest. So Ukraine's recovery will demand financial capital. We all know that. We've heard many, many discussions of that, as well as the underwriting and claims expertise that experienced foreign insurers once provided and should start providing again to de-risk and enable private investment to flow into Ukraine. This facility starts to build that muscle now, preparing local insurance firms to serve and grow with the post-conflict economy. And I really, really, really want to say a special thank you to Scott Nathan and the DFC team, as well as Eric and Bridget and the Aon team, and frankly, Luke and my team, for all their hard work to bring this together and make this happen. I believe firmly that experimentation and smart risk-taking is how we learn and how we make progress. And just as Ukraine has demonstrated an incredible talent for adaptability and innovation, we're all called to exhibit those same characteristics now. And I believe we can learn from this mechanism, build upon it, and in doing so, make a solid contribution to helping build Ukraine. So before I hand the floor over to my friend and my colleague, DFC CEO Scott Nathan, I want to commend Aon for its creativity, its pragmatism, its persistence, and its just willingness to answer the phone and try with us. And as a result, they've really helped us create a structure that can scale and grow in war and in peace. So let me close by saying we need the private sector to partner with us on these endeavors, and I am grateful to all the companies that are working with us and engaging in these efforts. So thank you very much, and it's my pleasure now to welcome my colleague and friend, the person who his team really spearheaded this effort, DFC CEO Scott Nathan.
Well, it's great to be here. It's great to be on stage with such important partners and colleagues and friends. And really, I think Penny said it all about this project, but I just want to emphasize a few additional points. First, to place it within the context of the overall effort of the Development Finance Corporation in Ukraine. You know, we and our predecessor agency, the Overseas Private Investment Corporation, were active in Ukraine long before Russia's full-scale invasion. We had a portfolio of loans, loan guarantees, and political risk insurance, totaled around $800 million going into 2022. But after Russia's brutal, illegal invasion in February 24th, 2022, we decided first to make sure that our existing clients were doing okay and had the support necessary from us to continue keeping people employed, keeping their employees safe, and operating their businesses. But we then looked not to the future, to some date off in the unknown future for recovery, but we looked to today, how we could support the private sector in Ukraine to keep production going, to keep the economy moving. And one of the most important tools in our toolkit was our political risk insurance. Since basically just over the last year, we've done about $350 million of direct deals in political risk insurance, insuring against war risk. I mean, today I'm pleased to be able to announce 3 transactions, 2 of which were $150 million each, one in the agricultural sector, another in the manufacturing sector, and a third in education, altogether over $300 million. The clients have asked, because of obvious security concerns, that we don't publicly release their names. But by providing war risk insurance, we're able to mobilize investment, make sure that they can keep working capital employed in their businesses, make sure that they can also deploy new capital for capital expenditures. This is critical for advancing not just the economy, but food security and health security in Ukraine, and we're delighted to be able to partner with these businesses to be able to move things forward. But the project that we're talking about today, I completely agree with the way Penny outlined it. It's critical for the financial infrastructure of any economy to have a functioning insurance business. It's clear that after the outbreak of the full-scale invasion, the amount of insurance capacity shrank to almost nothing in the Ukrainian economy, went from $1.5 billion of premiums written every year to almost nothing. Along with our partner in this deal, ARCS, we're able, as the Development Finance Corporation, to provide $50 million in war risk insurance, insurance against damage from aerial attacks from Russia, that enables ARCS to be able to move out into the market and offer insurance to a wide range of clients. They've been writing extremely small policies in very small number, but now will be able to really increase their capacity. And as Penny mentioned, the idea in working with Aon is that this will be scalable. We have other deals in our pipeline and look forward to hopefully announcing those soon. But the idea is to work with other local insurance companies in order to provide capacity for the economy. Insurance is a key element of mobilizing other capital in an economy, and we're delighted to be able to provide this innovative tool and this capacity. As Penny outlined, it's really been a pleasure to work with Aon. OPIC, our predecessor, and DFC have had a long relationship with Aon. Eric and his colleague Greg Case have been fantastic partners for us. Bridget has been terrific working with our team. And I'm very grateful to Penny for helping bring us together, and the whole team in the Special Representative's office for helping shepherd this transaction forward. I do look forward to future announcements. I think this is just the beginning. It's part of our overall effort to invest in the economy today in Ukraine, to mobilize capital today in Ukraine, and it does lay down the groundwork for the future, for investing when reconstruction recovery is in is fully underway. But it's critical that the economy function every single day today while the war goes on, and this capacity to the insurance market is a key part of that. Thanks very much.
Good morning. What is a very serious conference, I have to say, is warming my heart that everybody wants to talk about insurance. And so it's great to be here with everybody. And you know, just to pile on to the thank yous, working with Penny and all that she's done, working with Scott and his team to be able to really innovate a structure that allows capital into the local marketplace to meet the needs of local clients has been a year in effort. I remember sitting on a panel with Scott almost a year ago when we were in London talking about the need for war risk cover to be able to provide the financial protection and the capacity needed for investment and growth. It started that day in terms of the work that we did, and the fact that we're here a year later talking about real capital moving into the country to provide the right protection through the local insurer, I think is one of the critical innovations in this concept that can be scaled and replicated, as both Penny and Scott have said. And so what is it? We get that a lot, right, in terms of what did we announce today? And it's essentially a reinsurance sharing mechanism working with a local insurer to provide war risk. It's targeted towards energy, healthcare, small businesses, agriculture, as a way to allow both investors within Ukraine and outside Ukraine to bring capital to the country to grow. And the benefits are pretty self-evident, but just to lay out a few of them, certainly for the local insurers, it provides resiliency. It provides expertise, it provides capital, it allows growth in the local market. To the investors, it provides financial certainty to the investments that they're making. And obviously, it allows for the economy today to grow during wartime, and as a couple of people have already said, it provides the groundwork to be able to grow once peace breaks out. The other part of it is it's a framework. It's a framework to allow global insurers who are not yet involved in this scheme, as Penny mentioned, who we are already talking to about participating and also adding capital either behind the DFC or through other local insurers, of which there are 60 functioning today within the economy, to be able to provide that capital and expertise as we go forward. And the two deals that Scott mentioned this morning ultimately prove the question that we've been asked over the last 6 months of, is there really demand today during the conflict for war risk insurance? Are people really investing? And the answer is, of those two deals, one is Ukrainian, one is international, but substantial. As Scott said, there are $300 million of war risk cover, which shows companies are actually looking to make those kind of investments today. And so I think we are at the front end of what is going to be a long process. Certainly, it's a great, exciting step, and really excited about where we're going. And I would say, Aon has been in Ukraine for a long time as its largest broker, insurance broker. And I know our colleagues are more than over the moon about the opportunity to bring this capital to their clients within the country. And it's a very proud moment for us to be here with this group. So thank you for that, and stay tuned. Same time next year, we'll have something else to talk about.
Good morning, Deputy Prime Minister and dear panelists, ladies and gentlemen. Thank you very much for inviting IFC to be part of this panel, and actually a great announcement. I'm really looking forward to see next steps and to see how IFC can be part of this solution that is very much needed, as Penny mentioned in her remarks. So from IFC, we have been we have been active in Ukraine, even if, as the Deputy Prime Minister was mentioning, there is no embargo. And since the war started, we have already invested $1.4 billion in the country. We started investing in agribusiness, trade finance, and technology. And little by little, we have been moving towards more core infrastructure, because that is where we think there are more needs, and related to the CapEx that the Deputy Minister was also mentioning before, and the need of more investment in the country. So let me just briefly mention the sequencing that we have followed in Ukraine. We started with trade finance guarantees that were very much needed at the beginning of the war because of the interruptions to trade financing. And because of that situation, what we decided was to see how we could actually provide guarantees for critical imports and exports, and we have already financed more than $400 million related to that. Actually, last year in the URC, in this conference in London, together with MIGA and DFC and BII, we committed $300 million to trade finance guarantees that supported $1 billion of trade finance in the country. Going forward, actually, in this conference, we are signing with Deutsche Bank again another agreement to expand trade finance in the country, and specifically related to energy efficiency in Ukraine. The second pillar was establishing risk-sharing facilities with commercial banks. So the second thing that we realized is that there was ample liquidity in the market. There is a lot of liquidity in Ukraine, but there is no appetite to actually translate this liquidity into new credit, into new loans. So we started engaging with commercial banks to create risk-sharing facilities by which IFC was taking part of the risk, also other MDBs, and by that we were trying to create the incentives for commercial banks to start lending to MSMEs, both in the agri-sector, but also in manufacturing sectors. Thanks to that, we have already done more than $100 million in risk-sharing facilities, creating or leveraging or facilitating this additional credit or new credit to the private sector. The challenge here is to extend these risk-sharing facilities to mid-caps and trying to really continue moving the needle towards other type of companies that could benefit from these facilities. The third part of the third pillar of the sequencing is deploying guarantees from donors to really trying to invest more on CapEx. So this is the last of the three pillars that I mentioned before. We are grateful to the partners that have provided seed financing and donor financing, Switzerland, the UK, Netherlands, and Canada. And actually yesterday with the European Commission, we announced $350 million of new guarantees to scale up IFC investments in the country, which actually makes the European Commission our main donor. It is worth emphasizing that on average, IFC can leverage blended finance to crowd in between 7 to 10 private capital. So for each dollar that we receive from donors, we can leverage up to 7 times the mobilization of private capital. And therefore, we believe, as we have said on many different occasions, that the only way to actually deal with the $500 billion reconstruction needs that the World Bank has estimated is to crowd in private capital and to mobilize private capital. And the only way to actually mobilize that private capital capital is by the use of blended finance, by using donor financing to really leverage private capital that could be deployed. As a result of that, as an example, yesterday we announced 3 new investments, large-scale infrastructure projects in Ukraine, one of them with NJJ Holding, Horizon Capital and Data Group Volia, creating the country's leading integrated telecom operator, which could enable the largest FDI in Ukraine since the invasion. The second one, a potential investment to support the Ukrainian Danube shipping company with a comprehensive 86 million euros modernization plan. And the third one, a 60 million loan to Galnafotsbank for a 150 megawatt greenfield wind project in Ukraine. So with this, I really want to emphasize, and closing, that blended finance will continue to be absolutely key, especially when thinking on moving into more CapEx and long-term investment. Thank you very much.
Yep. Thank you so much for your statements. I believe that the new instruments provided by Aon, that's a new achievement, especially in engaging the local Ukrainian insurance for providing the worst insurance. There are no doubt that will make the tremendous difference and will be deployed with high demand. We also hope that the private sector players will follow you on adding the insurance availability and investment in Ukraine more broadly. We will also be, as you know, holding the insurance dedicated roundtable today at 12:30, very professional and dedicated discussion in Chernigiv room. So please join for those who are interested in learning more in depth. And with this, we will start with the second part of this panel. Please allow us a few minutes of change the speakers of the stage to the next discussion. I will pass the mic to Thomas Baum from LRMS. Thank you so much.
I have the pleasure to announce now the second part of this session, which is the panel discussion among MDBs and ECAs. So if we could try to put side discussions outside the room so that we can focus on the discussion that comes up. And I would like to ask now the panelists to the panel, the ECAs on that side, and the MDBs plus our great guest, Rostislav Shurma. Please take your seat over here. And so we are finishing the little pause in this discussion very soon. Sorry, this was supposed to be my seat. Anyway, I will stay here. Good. So, wonderful. Everyone is set for the second part. We have heard very good de-risking initiatives from the previous speakers, and I'm delighted that we can simply connect to this very, very quickly because a lot of things have been mentioned. Insurance has been mentioned as something good. A couple of people here, like myself, and the panelists are loving insurance as well. We have heard scaling up of investments, local banks' involvement, etc. We have distinguished speakers on that topic here as well. So my vision would be to have a very first quick round of introduction of the panel. So I believe everyone can do it themselves quickly. And please also make a statement why Ukraine or the Ukraine Recovery Conference goes to your heart. Shall we start to the far left, Kasia, please?
Good morning, everyone. My name is Katarzyna Kowalska. I'm the deputy CEO of KUKE, the Polish export credit agency. And actually, the Ukraine was always very close to KUKE heart because it was always, from the last number of years, one of our top markets. And it stayed to be our top market, even now.
And we will hear more about this as well. Yuichiro, please.
Thank you very much. Thank you for having me. I'm Yuichiro Akita, responsible for international strategic policy at Nexi. As Japanese ECA, we support export and direct investment to Ukraine. In addition to our continuous underwriting for Ukraine businesses, we also have developed close relationship with ECA Ukraine. It's remarkable for their achievements for past 2 years under a very stressful situation. If time allows later, I would like to introduce our collaboration with ECA Ukraine. Thank you.
Thank you, Yuichiro. Marianne, would you please continue?
Thank you. My name is Marianne Sandergaard Jensen, and I'm from IFO, the Danish Export and Investment Fund. And the Danish government has been very dedicated in providing or allowing IFO to support Ukrainian business and Danish business in Ukraine. We were very active before the war in Ukraine. And it's close to our heart, as you say, because of the relations we have with Ukraine. But also recently we've seen the need for financing and the fact that in many ways it's the perfect export credit market because you actually have a demand for reconstruction, companies that have projects that need financing, and that's where we feel we can make a difference. And we appreciate the very good collaboration we've had with the Ukraine authorities on this.
Thank you, Marianne. Arvid, please.
Good morning. Arvid Türkner is my name. I'm the EBRD's Managing Director for Ukraine and Moldova. So for the European Bank of Reconstruction and Development, Ukraine has obviously been a long-standing partner and investment destination. We have invested 20 billion euro over the 34 years. And mainly in the private sector, because that's where we try to engage most. And of course, we redoubled our efforts after the beginning of the full-scale war, and I'm going to talk more how we did that later.
Thank you. Rostislav, you don't have to explain why you have a special relation to Ukraine.
Yeah.
So for sure, it is a great pleasure to have you on this panel.
Yes. I'm Rostislav Shurma. I'm Deputy Head of the President's Office, covering energy, finance, economics, investments, business for President Zelensky. But I'll explain why I am at this panel. Because Ukraine needs a flow of equipment and investments like the Western Europe needed after the World War II. And export credit agencies is the perfect modern tool to facilitate that, and we need to unleash the full potential of that.
Thank you. You can stay.
Good morning to everyone. I'm Lionel Rapaille. I'm responsible for the lending activities of the European Investment Bank in enlargement and neighboring countries. So Ukraine has been, for the bank, a very important partner over the past year. We have built a portfolio of more than 7 billion. And our president has really underlined that Ukraine is and will remain a top priority for the bank. On its way to the EU accession, obviously, as a bank of the European Union, we are here for the long run. And I'm really convinced that investing in Ukraine is investing in Europe's future.
Thank you, Lionel. So now you know who is discussing, experts and specialists for the topic. And actually, Germany has an ECA as well. I kind of represent as a moderator. We are doing that business here for many, many years, 75 years this year, and Ukraine has been a key market for German ECA as well. And the solution of ECAs is actually 100 years old. Yeah, I think the UK invented it some 100 years back, and these are solutions that work in practice. What they do is leveraging private capital to projects via credit, but they also do de-risk. And basically, this is what all the institutions have done before the full-scale aggression started, but they have also done it immediately after the aggression started, which is a clear signal from the very beginning what ECAs are basically doing, and MDBs in the same way. So I would say the shock came in February 2022, and we would like to have maybe a bit more insight of what the action was and the successes were immediately after. And in the second part, don't be bored too much when we speak about past achievements. We would like to give an outlook of what comes next, what can be done more, how can we leverage it. So my first speaker would be, I think, Nexi, and according to what I thought. Yuichiro, yeah, you mentioned already some ideas, but maybe you go look a bit back what Nexi did after the aggression started.
Okay, thank you. So our underwriting policy or risk appetite toward Ukraine has remained open since February 2022. We wanted to show our solidarity to Ukraine, and Japanese companies also wanted the willingness to continue their business with Ukraine. Since the war starts, our underwriting amount for Ukraine is 453 million euro. The sectors are automobile and related parts or industry infrastructure equipment. However, among these cases, we actually paid the claim for only 6 cases, and the amount was just about $1 million US. This was unexpected for us. Despite continuous being underwriting insurance during the war, why are the insurance payouts so low? In our case, for short-term export insurance, we offer a single transaction basis. Therefore, when we underwrite the insurance, we review the region of the business, whether the supply chain is in place, the exporter can deliver to the buyer. And second, whether there are any issues with payment settlement, so our exporters can closely exchange with the buyer in Ukraine. For investment insurance, we continue to provide protection for Japanese investors while confirming business continuity and its implementation plans for unexpected situations caused by war in their business region particularly. It may be quite challenging for us to underwrite for long tenor at present. However, we will underwrite continuously through rolling over during the investment period. We try to ensure that the risk of business interruption remains within our acceptable range. In a nutshell, the lessons we learned here is to find right balance between not being overcautious to close a business and not paying sufficient caution to underwrite those risks. Thank you.
Thank you very much, Yuichiro. Great achievement, I think, of Japan, and we have seen it in the ESA community, how active Japan was specifically. I'm not sure here in Europe everyone noticed, but in Ukraine definitely it was noticed. Kuke, the Polish ECA was one of the front runners, especially in providing solutions for the supply chain security, because in the first days of the aggression, actually everyone was on shock and said, can I supply, can I finance, can I get credit? Kuke did this, and Kasia, perhaps you can sort of highlight a bit on the case of examples also to show why it was so vital to Polish exporters and their Ukrainian partners to have Kuke on their side.
Yes, thank you very much, Thomas. It's very nice to hear that. Actually, on the 24th of February, we met with the board of Kuke, and we were thinking what we should do, if we should close the limits or not for Ukraine. We closed them, apparently for Russia, but our decision was to keep it operative for Ukraine. Unfortunately, just the day after, the Central Bank of Ukraine made the decision for us because of the moratorium. Actually, they closed all our limits because we couldn't insure the trade when the moratorium was in place. So our decision was to continue. The central bank that time decided the opposite. But immediately after, once the Central Bank of Ukraine allowed a new transaction flow to be happening, in June the same year, Kuke opened the limits again. And we opened them and we made some few, I would say, crazy decisions at the same time. First crazy decision that we've made was, okay, we were the first opening the limits to operate. Second crazy decision was to decrease the price 35%. It's quite opposite to the risk evaluation. The third crazy decision was when the OECD met and decreased the rating of the Ukraine to B7. I don't know if you are aware, but the ratings of the country affects the prices. So our decision was to keep the Ukraine on 6, to keep the price lower. So in general, we made the decision to, with the increased risk of the country, to halve the price. Why we have done that? We have done that for 2 reasons. One of those reasons, and it is true, was that Ukrainian companies needed the liquidity. For the last few months, a decision was made in June. For the months before, they were not operated at all. So if the companies could not operate the business, they didn't have a cash. So without the cash, they could not do the orders. So we thought it is very necessary to give the credit limits to Ukrainian companies. Another, of course, and clearly this is our mission, was to support Polish companies to continue their businesses with Ukraine. And for you to know, since that time, we insured actually quite the same turnover that IFC. We are close to $1 billion nowadays. And what is even more interesting, and I'm always trying to encourage all ECAs that were not yet open at the time to be open for Ukraine, we paid only one claim for newly open limits, $1 billion of the turnover, $50,000 claim paid. So I'm not very diplomatic, and sorry for saying that, Thomas, but our loss ratio for Ukraine is much better than for Germany.
Okay. So, Kasia, thanks a lot for this one. I wanted to make a nicer kind of roundup that actually when we spoke the first time about Poland more than a year ago, Kasia, you came exactly with this news also to the German scheme, the German ECA, and we opened up the limits very fast, also banking on this kind of first-hand experience. So definitely we can echo from the German side that the claims ratio in Ukraine is low. I'm not so sure about the German comparison, but forget about this for a second. So linking this panel together, because it's MDBs and ECAs, and Marianne, just a second, we would like to bring into the discussion now the MDBs. And EIB is someone who does something else, actually, sort of in the main profession. But of course, there's a lot of connectivity to what ECAs do in terms of supply chain, in terms of long-term finance for projects. So perhaps, Lionel, you can say a few words about what EIB has achieved after the aggression started, what happened in the times of shock in Luxembourg. Perhaps you can elaborate a bit on this.
Thank you. Yes, well, certainly after the start of the Russian aggression in February 2022, I think we really reacted with a sense of urgency, with flexibility, and at scale. So really, the first few weeks after the start of the invasion, we mobilized several hundreds of millions to basically support the authorities to cope with a terrific situation. And I would really like to praise the work that we have been able to do with our Ukrainian partners to channel these funds to the right priorities. So since the start of the invasion, we mobilized in total more than 2 billion euros along 3 areas. First of all, to support recovery of critical infrastructure. So basically repairing bridges, enabling the railways to function, enabling the energy systems to continue to supply heating and electricity. The second thing was to keep livelihood at a municipal level. So we had a number of municipal programs which we continue to deploy in the current circumstances. And actually we are scaling this up. Yesterday we signed a new law of 100 million euros for social infrastructure, hospitals, social housing at a local level. And third, it was really to keep, or enable to keep the real economy running, so supporting the private sector. And I will zoom in on this because the topic is de-risking private sector, so let me explain a few things we have done. I will mention two programs. One is the idea that we wanted to have the local private sector having still access to finance. And here the key challenge was to have local banks, Ukrainian banks, to keep doing their job and to have their liquidity not necessarily placed only in government bonds, but also to channel it to the private sector. But the issue was indeed for them to accept the level of risk in the economy. And here we had in place de-risking programs, what we call partial portfolio guarantees for SMEs, which have been very successful. Mm-hmm. We had this before the start of the Russian invasion, and we mobilized 500 million euros. But now we are scaling this up. So yesterday, with EU support, with the European Commission under this EU-Ukraine facility, we will be able to mobilize more than 1 billion euros of investment for the local private sector. So I think this is a very powerful tool which enables the banks to keep doing what they are best doing. And a new initiative we are launching now, and I'm glad to see ECAs around the table, is actually to enable foreign companies to supply, to invest in Ukraine. And here our concept is simply to enhance the capacity, the firepower of European ECAs so that they can take more risk in Ukraine and basically to de-risk part of their activities. And again, here we will mobilize the fund from the EU, from the European Commission to do this, and I will be happy, of course, to give more details.
Yeah, Lionel, thanks a lot. It's also very, very important to this discussion how indirect support functions, because often when you read EIB and their mandate, then you would say probably what is the specific project EIB has financed. But yes, they are banking on partners when they support Ukraine and other countries, of course, as well. But we are talking about Ukraine. And this is amazing, yeah? And I think the very same pattern is followed inter alia by EBRD. You are doing it directly as well, but you also enable partners to use funds, to use guarantees of it. The same situation, yeah? February 2022, EBRD, you were exposed a lot. You were very active before the aggression started already. What happened then in London?
Of course, thank you, Thomas. Well, not only did we have a portfolio of existing clients and relationships, we also wanted to be to continue to be active. And as I said earlier, we literally doubled down and wanted to do more. So since the beginning of the war, we have invested 4.2 billion euros in Ukraine, and pretty evenly split between public sector and private sector. Public sector, of course, are the larger transactions, so 90% of all the operations actually happened in the private sector. This year we continue full pace, I have to say, 500 million already invested, and I'm very proud to say that at this URC we are adding literally more than 1 billion of new financings, and that's a combination of firm and, let's say, final commitments, some pretty advanced pre-financing agreements, which we all aim to sign in the very near future, certainly this year. And I also count into that the MOU, which we signed with the Prime Minister just last week, about 300 million euro for the energy sector, and that's something we want to deploy very urgently, given the obviously urgent and also huge needs. So now, how did we do that? Obviously, we didn't do that alone. We raised an unprecedented amount of donor financing from many of our shareholders. I mean, as EBRD, we always deploy donor funds for blended finance, for new products and certain situations. So it's not an unusual tool, but the amounts were really unprecedented. And that was the main kind of de-risking tool for us, to go in full pace and full speed into Ukraine in this situation. And more than 1.7 billion we have raised from many of our partners. So as Rostislav is very aware, in the energy sector we did a lot, and also vital infrastructure. These were kind of two of the key topics. Always Ukrenergo comes to mind as one of our very good partners. We deployed more than 700 million, very much backed up by US, Norway, the Netherlands, UK, and also the EU. We financed emergency liquidity, we financed emergency repairs. Lately, we shifted very much to financing shelters in order to protect against the attacks, the transformer stations. So this is just one example, but we did things with Naftogaz, Ukrainian Railways, Ukrhydroenergo in similar amounts. But again, half of the financing went to the private sector, and the private sector as well benefits from guarantees and grants sometimes to ease some of the burden caused by the destruction. So I stop here and go in a few products in a bit more detail later on.
Thank you very much, Arvid. It's impressive. Actually, we should have a round of applause all the time, but we don't. Yeah, please. I sometimes feel that it is missed here, because all the smaller things, which I don't want to call it small, but you have the big numbers, but we also have small numbers, and they all add up to the support that Ukraine needs. Rostislav, you are here now, well, not the referee of this panel, but you are, for me, but the caretaker of all the audience, Ukrainian companies, Ukrainian parties, who actually the use cases of all these offers you have heard of. Now, looking back for a second, also for you yourself, you were so active in this topic, access to finance, de-risking. How do you see the achievements yourself? And then probably this is your role to point on the bottlenecks and maybe the missing parts, which should dominate our second discussion part, really to look forward. Rostislav, the floor is yours.
Yes. Good afternoon to everybody. First of all, I would like to say the big thanks to everybody here on the scene, because every ECA, specifically U4, the Denmark, the Germany, the Poland and the Japanese, you were the leaders in terms of the speed of the decision, in terms of the efforts, in terms of the support. And big thanks to EBRD, because without your money, I tell you frankly, we would not survive. But I would perhaps be brave enough to say that for the ECAs, there is one absolutely obvious leader. On the, I would say, comprehensive evaluation, if you take the products offered in terms of maturity, in terms of coverage, in terms of pricing, in terms of the variety of what is being offered from small to big, in terms of the instruments that are being offered, and this is the Danish A4. So we think that this is absolutely benchmark program, and we would really kindly ask every ECA globally to have a look at what the guys have done. And this is really great, what they've done for Ukraine. But what astonished me the most during the discussion with the senior leadership of the A4, they said, look, yes, we do support Ukraine. This is the donation, but we look at this as the long-term business because we believe that in Ukraine, there is a huge market potentially. And we want our companies to be the first there. And this is our conscious decision now to do this step to make them the leaders on the market. And I believe if this approach is being followed by the others, this is the real pathway to the recovery. Moreover, everybody has heard what are the real insurance payments. So it's pennies comparatively to what was issued and what was granted. So for the moment, for the 2.5 years of the active war, I think it's pretty good result that confirms that this risk can be taken by the ECAs and by the other institutions to ensure the long-term goals. But now let's move to maybe to the very specific technical bottlenecks that we see analyzing the programs of the dozens of ECAs. Every of them has different bottlenecks, but the most common of them are the following. The first one, the most important, is about the pricing. Because of the category 7, so all-in cost for Ukraine, if there are no adjustment, no subsidies, is around 15%. So non-project in any industry can pay 15% for the debt. So just doing the reference to the Denmark program, they've done the adjustments. It's around 7 to 8% at the moment. And this is quite manageable for the Ukrainian companies. Block number 2 is about the maturity. I would say the absolute majority of the ECAs are now offering only the trade products for 90 days, 180 days. But the trade finance is not the bottleneck for the Ukrainian companies at the moment. The real bottleneck is about the investment products. And we definitely need 5+, 7+ years programs. So the A4 has 22 years programs. Maybe we don't need 22, but we definitely need from 7 to 10 years for the basic industries. Number 3 is about the size. Everybody is so focused on the SMEs and on the small amounts. It's really important to build a sustainable economy in Ukraine. But if you look at the modern industry, so you can hardly find the projects with the tickets under 50 million, sometimes under 100 million. Let's take renewables, the wind park. The mid-sized wind park, it's like 200-300 million US dollars. Let's take green steel, it's about billions, and this is the cornerstone industries for the future of Ukraine. For example, A4 has recently issued the product for 380 million euro. One loan, 380 million euro. Small Denmark. So, these are perhaps, one more, coverage. So, some of you offer 100%, but some of you offer 95%. It seems like 95, 90, it's enough. But unfortunately, due to the regulations, these 5 or 10% that goes to the balance sheet of the bank, it assumes the 100% or even more reserves from the capital. And non-bank will take this exposure. So the only product that will work under the current conditions, under the current ratings, which assumes 100% coverage. I think that's it. So let's have a discussion at what might be the solutions for that. Thank you.
As an ECA underwriter, thanks. As an ECA underwriter, I think, Rostislav, you hit the nail on the head exactly with the things you've mentioned, tenors, interest rates, all that. And I think we'll come to this. Nexi, Marianne, you may wait a second, yeah, with the IFO offer to explain a bit more how you did it and how we can bank on that one. And Nexi should actually address a couple of these bottlenecks. Of course, one is always cooperation, yeah, because when the tickets get very big, some of the ECAs may feel that they should not walk alone that road. And here I think Nexi and others can share achievements and plans going forward. Yuichiro, please.
Right. Thank you very much. So first, it is necessary to encourage exporters, entrepreneurs, and industry sector for Ukraine reconstruction projects. So in our case, in February, Japan-Ukraine Conference for Promotion of Economic Reconstruction was held in Tokyo, where 56 MOUs were signed between Japan and Ukraine business sector. At that occasion, to show Nexi's sufficient appetite for risk-taking for their businesses, Nexi announced 1.25 billion euro credit lines for export and investments to Ukraine. Following the conference, consultations with companies from both Japan and Ukraine increased. The second point, given the ongoing challenge environment, the upcoming infrastructure development will require cooperation among ECAs. A single ECA's response is not sufficient. So it is essential for ECAs from willing countries to advance cooperation, including risk sharing through joint insurance or reinsurance. In this context, I'm delighted to inform you that yesterday, under the initiative of the German government and Eurohelmis, the 13 willing ECAs and investment insurance agency from around the world agreed on the memorandum of cooperation to support Ukraine. It is essential to strengthen and develop this framework to share risks, share best practices, and for ECAs around the world to work together for Ukraine reconstruction. The third, it is important to emphasize that forming viable, bankable, and investable projects involves joint work with ECAs, multilaterals, and Ukraine stakeholders. As an example of this effort, I'd like to introduce the cooperation between ECA Ukraine and Nexi. ECA Ukraine, established in the year 2018, has recently developed an investment insurance product to cover war risk related to private investment in Ukraine. During this process, Nexi provided technical cooperation to ECA Ukraine to share our experiences and knowledge in investment insurance. Despite the challenge environment, they have succeeded in commercializing these efforts, and I commend their hard work and dedication. Such efforts are the foundation supporting private investment. Moving forward, it is important to continue working together to increase the supply of patient capital for the reconstruction, which is sizable funding needs. Thank you.
Thank you very much, Yuichiro. That leads back to Kuke again, because we heard Rostislav talking. You mentioned the short term, the trade finance, and Rostislav said, well, this is done. So the task has been achieved by Kuke and others. What are we doing with the medium long-term projects? He spoke about interest rates, he spoke about tenors. What is Kuke saying to this?
Yes, actually, since June 22, we are also open to make those transactions, but we haven't done yet any. So talking about bottlenecks, I would like to give you some explanation how some export credit agency works. Euler Hermes and Kuke, we are pure cover. That means that we are only covering, insuring the risk. We don't have any funds. There are also the ECAs like IFO that can go with the funds, not only with the insurance and guarantees. So our bottleneck is that we are open to take the risk of Ukraine, but at the same time, it needs to be bankable in order for banks to be open as well, because they are the ones who are funding it. So this is very important, and this is a huge bottleneck for us to find the cash for those projects in general, make it very simple. As a Kuke, we are going up until 100%. of the cover. We are open for that. We will be doing that always for the war risk. And for the credit risk, preferable would be not 100%, but with the special circumstances, we can take it. About the pricing, in general, we are following the consensus. So the pricing among ECAs, and as far as we are talking with each other, so we know what others are doing. Most of the ECAs decided to follow the consensus. So our pricing is quite the same among others. And I think this is most important. About the risking and the war risk, yesterday we signed the MOU with MIGA, and I'm very, very happy to share with you that soon after the MOU, still this month, we will finalize our first project.
In investment insurance.
In investment insurance,
Exactly.
covering the war risk.
Fantastic. Thanks a lot.
Thank you.
So, Lionel, in your first statement, you already mentioned the plan. It's still a plan, but it's very soon coming online. The plan to support the ECAs and to leverage what people like IFO and KUKE, unfortunately not NEXI, you're not member of the European Union yet. We are, yeah, but actually it feels a bit like it, sorry to say, yeah, but it is very close. But Lionel, yes, seriously, you are planning this, your teams are working hard, we know. Can you say maybe a bit more? Also, I think now, you mentioned we spoke about the short-term trade credit that ECAs are doing, medium, long-term, tenors of 10 years and more. Will that be part of the program?
Yes, thank you. Well, just to say, the European Union is going to go east.
You're right.
Very fast with Ukraine.
I know. So Japan is east.
But staying in Ukraine for a while. Yes, no, as I mentioned, well, yes, we have been doing these de-risking instruments for local banks, local SMEs, but indeed, we are very excited now to have this program, which is being designed by our subsidiary, the European Investment Fund, to support the activities of ECAs. So I'm very pleased to hear that there is much activity, willingness to support investment export to Ukraine. This is a program so that we are going to have funded by the EU and the European Commission through the InvestEU program. And indeed, we are very close to have it approved. It's going next week to the board of the EIF, European Investment Fund, so it could be rolled then out shortly. So what is it about? It's an envelope of 300 million euros, which will enable to boost, to increase the firepower of ECAs for their support of lending or investment in Ukraine. So indeed, this will enable both SMEs, European SMEs exporting to Ukraine, but as well the investment side. And we will cover a large portion of the risk with the 300 million, but we still expect some leverage. So certainly this is an instrument which will enhance the capacity, which will enable to improve the financing conditions which are offered. And in a way, if successful, I can only imagine that this is a type of program which, as needed, could be scaled up. And last point, perhaps, I think it's very complementary to a number of other actions we see. We heard earlier a number of insurance program by various players. So I think this comes as a very useful EU instrument to support Ukraine. So very, very hopeful that we will launch it soon.
Yeah, I can say, yeah, the ECA community is really interested extremely in this development because it shows that European institutions, although they are national in nature, can link together and connect then to a European institution and combine in aims. In your case, it's Ukraine focus plus SME focus, all the things that also are important for the national ECAs. So definitely a great development. Thank you already now. Next week, we even hear more. Arvid, the connectivity of the institutions is, of course, of interest. Yeah, everyone in the room says, well, EBRD, we understand what they do. Now you sit together with the ECAs, and in preparation, we discussed this shortly. I mean, how to link to maybe Rostislav's request of saying, okay, do longer term tenors, do cheaper access to finance, to larger transactions. EBRD is active, and I mentioned it in the beginning, yeah, in this local bank support. Maybe you can also address this bottleneck a little bit from your perspective going forward.
Yes, thank you. Is it on? Yes.
Yes.
Well, kind of few maybe reactions to what has been said. First of all, linking to back to the first part of the discussion, war risk insurance. I thought the slide which the Deputy Prime Minister put on was very telling. I mean, that's a landscape where many different complementary products come together. And I think it's great that we have another addition announced today, but also EBRD is working on an inland cargo insurance, which was shown on the slide. So I think the landscape is evolving, and that will certainly help de-risking transactions. Then second point to what has been said now, the ECAs. Look, I mean, funding is our job, and as Lionel also said, I mean, EBRD would be happy to look into funding long-term transactions. That's our core business. If you support that with ECA cover, I mean, we come together, Poland and everyone here is our shareholder, so we talk. Please approach us directly. We are ready to review that on a case-by-case, project-by-project basis, and would definitely be ready to engage. And then third point maybe, and again, I don't want to repeat too much because IFC has a similar product, EIB has a similar product, we are all supporting the banking sector, but I just wanted to say it is very, very important. For me, it's also a de-risking. Every FDI who comes in, every larger project needs a banking sector, or let's say needs an actively lending banking sector, and we have a very well-functioning banking sector in Ukraine. But, of course, the war kind of induced some risk, reduced risk appetite, so to say. So there was a desire to keep more liquidity, to invest in high-yielding government bonds, and there has been less lending. So I think these insurance risk portfolio sharing products are very, very important. We have done that at scale with altogether 12 banks in Ukraine, and kind of generated a multiple of our kind of risk portfolio risk sharing, generated a multiple of that amount in lending to mainly SMEs, but also mid-sized corporates of more than 1 billion in the market. And I think that's impressive amounts and very much needed amounts. And perhaps one aspect which hasn't been stressed so much on that portfolio risk sharing is also the thematic approach we give it. So we try to innovate and work with our partner banks on products they need. So this year, for example, we launched 2 products. One is on reintegration of veterans, very much supported by the NBU as well. And we support the banks to make their own operations veteran-friendly on the client side, but also on the reintegration of veteran employees, and also lend to businesses who employ veterans and take measures to kind of reintegrate smoothly. And I think that's a topic which is obviously very, very important for Ukraine going forward, as we see increasing numbers of veterans returning and needing integration into the labor force. Second product is Enterprise Renaissance, we call it. It is support to SMEs which have suffered war damage, some sort of disruptions. And again, it is supported by the EU with some price incentives, so we are trying to keep the pricing also low in the circumstances. And the third product, and again, here I hope, Rostislav, that you will support, we are trying to come up with an energy generation, so to say, product, which helps banks to reach SMEs and mid-sized corporates to invest into electricity generation as fast as possible for own consumption, but that will also support, obviously, the grid and the broader needs of the economy. And this is something which cannot be done by, let's say, heavy institutions like IFIs. We do need the nimble banking sector who has the client relationships to reach out to do everything at different levels. And we will do the big projects, but I think we need the small ones as well. And altogether, they are also an incredible force and support.
Thank you.
So I think I'll stop here.
Yeah, thank you very much. Mindful of our time because we need to be finishing on time. Thanks. The applause can still go to EBRD. We have now built the expectations up high, Marianne. Yeah, sorry. So it's a bit of a climax nearly because you were praised in the very beginning as the sort of role model ECA in Ukraine. And of course, now it's time to listen carefully what IFO has developed over the last month. And Marianne, please, what is so special about IFO's offer, and how can we all, I mean, all the ECAs on the panel and beyond, learn and maybe copycat some of the things you have done?
Thank you, Thomas, and thank you, Mr. Schumer, for being so positive. And I would also like to thank my Ukraine team at home, since they've done such a great job, so I didn't really have to be here because everyone knows about the program. And I have put out some brochures in the room somewhere that will go into details, so I'll skip the details. Before I go into a bit why we've done as we've done, I would like to already say that we do need reinsurance because, as was mentioned, we've done a large deal. We're willing to do a large deal, but it's a lot. So the more we can reinsure, either through the EIF program, have funding from EBRD, or reinsure among ourselves, that is very much appreciated. Now, I also wanted to follow up on Kasia's comment that ECAs are very different, and we heard a lot about short-term, especially, and your experience there. We do not have as much experience on the short-term, the turnover business. We do have some. We reinsure the private market. But our focus in the Danish system has always been MLT. So I think we're all called ECAs, but we are very dependent on the way we've been structured over the 100 years that we've existed has very much depended on our own internal market in our nation. What type of exports do we have? What type of business? What is our financial market like? So it's very difficult to just copy from one to the other because we are structured differently. Now, as mentioned in the beginning, Ukraine has always been an important market for us. Danish companies have been very active in Ukraine, so it was obvious for us that we should try and continue. But what made the difference is that our government allowed us to continue in the sense that they realized with the structure we have, we might have said, oh, it's very high risk, we have to be careful, we have to, all the different rules that we have, it will take some time before we're ready to go to Ukraine. But it was a very clear message from our government that said, you just have to do it. We are 100% behind you. And what was unique in this world is that they said, we're willing to take the risk, but we need to ask you to use all your expertise and all the products you can think of. And usually what happens is the government also meddles a bit of saying, oh, but if you do this product, you shouldn't do this, and you have different systems. Here they just said, here's a bag of risk capital, and you can do whatever you can think of. But do it, of course, properly. You have to abide by all the rules, so we risk price 7 as well. But we have found a way of getting to a price that then is feasible, because we can do direct lending, which, as Kasia said, others can't. They're dependent on the banks. We tried to get, usually we prefer, we're not a bank, so we usually use banks to be our agent. And many banks didn't want to do that yet, even with a 100% guarantee. I think there is now a willingness to do it, but we've had to develop our own way of doing banking because we had no agent bank. But we hope that, because that is not our, we would rather do our guarantees or direct lending through a bank. We have the 100% guarantee on everything. It makes it easier. We only require 30% Danish content, so it's also easier for the buyer to say, well, there's 30%, but can I buy from Germany or Japan? We say, fine. Hopefully you will reinsure us if we need that. We also were, they said, you know, when they said you can use all instruments, we said, how about concessional loans? That is usually something our development agency does. And they said, fine. And I said, and even we don't go through the development budget, because a development budget, many of you will know, has its own process. Here they said you have to abide by all the requirements for concessional financing, but it's a special amount just for Ukraine. So that, and it's for public buyers. So we could use all the instruments, and also I think what I would highlight is what is different is, for example, on ESG issues, which is for all of us an important element. We have a specific ESG consultant just for projects in Ukraine that go out with my colleague who works. We have boots on the ground in Kiev, and they visit the projects, they find the buyers. So it's a very hands-on, but it wouldn't have been possible if the government hadn't said, here's the money, be as creative as you can be within the rules. I don't know if you can copy that, but I think that's the message you should send to your government.
A couple of people are in the room, but they can listen.
And then if I may, one challenge we have that I would like to use a corporation for is on know your customer.
Right.
Because that is one of the more difficult elements. We're not, my colleague, he says, we're not afraid of the risk, but we're afraid of not knowing our customer properly.
Yeah.
And if there's any way we can use the network here, the EBRD local network, any reinsurance from the Ukrainian government that they do to improve anti-corruption and know your customer procedures that we have to abide by, the more business we can do.
Thank you very much. So IFO leads the track. So mindful of time, we have actually virtually come to the end of the session, but what I would like to do, Rostislav, with your excuse, would open the floor at least to one question, because we are a panel discussion, there are people in the room. Maybe we can get a microphone to two people are here. Short question, please, that we don't spend too much time, and Rostislav should kind of wrap up maybe what he got away, if you allow. Yeah, let's answer these questions first. Oh yeah, maybe for translation. Yeah.
Janne Harjunpää, East Office of Finnish Industries. I'm very impressed with what you do. Can you open up your analytics, risk assessment a little bit? It cannot be all politics. For the benefit of my colleague from Finvera. And for the EBRD and others, we would need to have second and third tier supplier funding more. Not everybody can be EPC contractor.
Thank you. I think it's a good question, maybe with a longer answer than necessary. Risk analysis is shared in many fora, and I think Finvera might not need us to explain how to do it. To be honest, I know the gentlemen and the ladies in Helsinki. You can maybe discuss it at a coffee. On the other topic, third tier, second tier supply chains, I mean, we would say we are active in that field. Poland, I know we are, Germany is. Anything to add perhaps from EBRD or from EIB immediately, how you approach that?
Well, if I think about Ukraine business, the kind of thing we are looking at is that does the money go to Ukraine? But then, having said that, we are also working in 38 other economies, so we can finance a lot of supply chain, but only in the countries where we actively invest. I mean, Finland wouldn't be one of those, I'm afraid. But then maybe there's something EIB can do.
Nice, yeah.
Very briefly on this, two things. One is certainly to support the integration of value chains when we work, for instance, in Ukraine. So to look at what can be done in the supply chain, well, looking on the EU side, of course. Second, well, yes, as the EIB, we operate, we lend, we finance in the 27 member states. So I think, again, here we can see how the linkages which can be helpful.
Perhaps we should, after the panel, come back to us again. So maybe the second question for sort of, no, I'm killed. Sorry, I will need to ask, I will be killed, unfortunately, because the follow-up panel. Rostislav, you should have a sort of a roundup statement on what you hear. How optimistic are you that the next 12 months will see even an expansion of what the gentlemen and ladies on that panel propose?
I'm very optimistic, first of all, because we had a constant dialogue with the multilaterals and ECAs, and we are very happy that our feedback is being received. So what the government told that should be adjusted in the program, specifically EBRD, EIB, it was heard, and there are already real actions. And this is the main thing, that we have a dialogue, and we commonly develop the projects. The second, the mood and the intentions that I have heard today, provides me a bit optimism about the fact that we'll really bring the ECA products, the multilateral products, to absolutely new level, which will scale the projects in Ukraine. And point number 3, we told about the bottlenecks that are in the ECAs, but there are bottlenecks as well in Ukraine. And we do understand all of those bottlenecks, and believe me, all of them will be fixed, starting from the currency limitations. I know that the central bank is working on that, and it will be shortly resolved, ending up with the availability of the projects. So now we are putting a lot of efforts into establishing a couple of PPFs, project preparation facilities, with World Bank, with JP Morgan, with McKinsey, so that we can provide the really high-quality bankable projects to the ECAs and to multilaterals. So I believe we'll have a breakthrough in this segment in the next 12 months.
This deserves a round of applause, Rostislav. Definitely, everything you said, I can echo. All the effort to make ECA finance possible from the Ukrainian side, yeah, definitely agree. Thank you very much for your attention. It was a great pleasure, and have a good conference. Thanks a lot.